Good morning and welcome to the OFX Currency Corner. Overnight we've seen the Australian dollar test those 13-month lows again around the 73.30 handle as the risk-off mood through trade on Monday was escalated on the release of a leaked memo that suggests that the US and the Trump administration were possibly looking at leaving the World Trade Organization. This, coupled with a Friday deadline for the imposition of a $34 billion increase in tariffs imposed on China, has only heightened trade hostilities, and that's further weighing on the global demand for risk and, as a proxy, the Australian dollar. We've seen a sharp sell-off in the value of the Australian dollar over the last 2 weeks, and a lot of that has to do with these US-Chinese trade tensions. The depreciation in the value of the CNY and the expectation for economies heavily linked to that global value chain and Chinese growth story has had a heavy impact on our own value, while strong US macroeconomic indicators coupled with that US Treasury yield outlook and the expectation for tighter and steeper US monetary policy has only further exacerbated these moves. We're now looking at a possible move below this handle, and a break below 73.30 could see us test lows within the 72-cent range, with not a lot stopping us moving towards 72.30. We'll be keenly watching these trade tensions as they develop this week as the primary drivers, with a side look to a few macroeconomic indicators in the RBA monetary policy statement today. We'll be looking at hints as to whether that next move will remain up after a question was raised after the minutes at last month's meeting, and then of course FOMC minutes for June as well, playing a key impact on the Australian dollar performance moving forward. For more direction, don't hesitate in contacting our dealing teams.